We were just arguing that this would look like a typical bull market recovery. And for some reason, I think I saw the price of Bitcoin again, and I was like, whoa, this thing just went 10x in just a few years. And so, I've covered stocks enough to know that sometimes when something does a 10x, it means there is something to it, not that it's a bubble. I mean, from the shorter lens, this incoming administration, I think, is doing things that look very disruptive at the moment, but I think structurally are really positive, because it's a path for U.S. deficit to normalize, and I think there's still plenty of disruption ahead, including crypto. And I think Bitcoin is still our favorite idea for this year.
We get the optimism about Trump, then we get the correction until we get the actual news story. Where do you think we lie on this? Is this an overbuild and everyone's going to write off a whole bunch of capital? Or is this still too early to say?
As Bitcoin's price continues to decline, the crypto market sell-off intensifies as we head into the third week of March. Tom Lee has an urgent update for those selling Bitcoin and shares his prediction for the next month. Historically, tracking Bitcoin's price in the year following its halving and after multiple all-time highs, financial analyst and Bitcoin bull Tom Lee discusses his forecast for Bitcoin investors and why he believes $400 trillion is about to flow into Bitcoin. Currently, Bitcoin is priced just under $81,700, down more than 15% in the past month. However, Lee believes Bitcoin is on the verge of making history and predicts that in the coming months, we'll see one of the biggest price surges since the cryptocurrency's creation. This story is expected to gain even more momentum in 2025, particularly with the launch of Bitcoin ETF. With thousands of institutional investors in the US now buying Bitcoin, demand for the leading digital asset has skyrocketed. This surge in demand has created a supply-demand imbalance like never before, and Tom Lee predicts that everything is about to change for Bitcoin. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
I mean, I think the story arcs are pretty bullish right now. From the shorter lens, this incoming administration, I think, is doing things that look very disruptive at the moment, but I think structurally are really positive, because it's a path for U.S. deficit to normalize. And I think even though things like these consumer confidence reports don't show it, and we know that there is tangible drivers of productivity, including AI, in front of us, that justify investors allocating capital. And of course, there's still plenty of disruption ahead, including crypto. I think Bitcoin is still our favorite idea for this year. So we think it'll be the best performing asset class, even better than gold. But I think anchoring all of this is a demographic story. I can send you some charts later, but if we look at the number of people aged 30 to 50 in the US, that's actually been steadily rising since 2009. It actually went positive in 2016. And what I mean by that is the number of people aged 30 to 50 matters in an economy, because they're the ones that are driving both credit consumption, but also productivity, innovation. Yeah. And then there's a contrast, because as you know, in the rest of the world actually has a depletion of population. And so that's creating the demand for AI workers, which is what the US tech companies are producing. So I think that this does feel like it's going to be a very bullish equity cycle ahead. And that's why we're constructive. And it's been a rough start for this year, but I think we're just sort of getting through some of the kinks and burning off some of the recent bullishness.
But where do you think we lie on this? Is this an overbuild and everyone's going to write off a whole bunch of capital? Or is this still too early to say?
People who are going to call the top in data center demand have never really experienced industrial cycles, right? Because the cycles actually are going to extend until return on invested capital is well past negative. And I would be very surprised if we're already reaching that saturation now, because we know that any model today would have improved capabilities if you improved computing power or capacity. So we aren't even experiencing the negative side of that utility yet. So I think that it actually would still argue that you need to be investing more capital. We did spend about 4 months doing a research white paper on Bitcoin. And then in 2017, I remember just for some reason, I think I saw the price of Bitcoin again, and I was like, whoa, this thing just went 10x in just a few years. And so I've covered stocks enough to know that sometimes when something does a 10x, it means there is something to it, not that it's a bubble. Like most people, I think, tend to think if something's gone up a lot, it's a bubble. But actually, in the equity world, a lot of times it's actually telling you something's real.
Particularly when it's a network. That's the big difference.
Yes.
Networks tend to do this much more consistently.
It's exactly what you said. First, we found that if you just did a very simple two-factor model, which is the number of wallets and then activity per wallet, it explained over 90% of the rise of Bitcoin since inception.
Yeah, and it's a good approximation for Metcalfe's law. It's the best way I got of fitting Metcalfe's law to the network value.
That's right. And then, we realized that's exactly why social media networks created value. Because, I mean, the idea of like eyeballs and someone being the customer, and then because it's free and you sell them out, like that was a very new concept. So to me, I had already believed in this idea that you could create businesses digitally that didn't start with a factory. And so we published our first report on Bitcoin. It was around $1,000 though. But we said that by using the same two-factor model by 2022, it could be $25,000. And that was either saying it was going to be worth 10% of gold or the number of wallets were going to increase. I don't remember the whatever assumptions we used. Of course, I was advocating for Bitcoin. We recommended 2%, but it wasn't something that we thought we would hang our reputation on. But it created immediate backlash for us. Of course, I was advocating for Bitcoin. We recommended 2%, but it wasn't something that we thought we would hang our reputation on. But it created immediate backlash for us with our institutional client. So we actually got famously fired by several well-known hedge funds.
With unwavering enthusiasm for the Bitcoin space, Tom Lee confidently predicts explosive growth on the horizon. He points to the actions of BlackRock and other crypto giants as a clear signal of what's to come. Lee reassures that the long-awaited surge will arrive by the end of 2025, forecasting that there will be 1.1 billion active crypto wallet. The pace of this growth is almost unimaginable, and it will mark the fastest wealth accumulation the world has ever seen. After a career of research, Lee concludes that every chart and piece of analysis supports the same idea. Liquidity drives everything, and crypto will be the top-performing asset.
But then I assumed we were probably onto something, because I figured if someone...
Yeah, that's right. When you see that reaction, it's probably right.
Yeah, because if someone hates it, they haven't done the work.
Yeah.
And so now it's almost 9 years later, eight years later. And Bitcoin's obviously done really well. It's actually had cycles, and you've been involved for a long time too. I remember you told me you got involved like in 2014.
2013,
yeah.
I wrote the first ever macro strategy piece on Bitcoin in 2013.
Wow. Whatever that was the report John Norman saw. And that
might have been,
right?
Might have been. All the hedge funds, everybody passed it around because it became this thing of like, so I onboarded everybody from Dan Tapiero to Mark Yusko to, you name it, all the macro people was all because of me. John Burbank, you name it.
I might say that might have been your report, because I don't know why John Norman would have brought up Bitcoin. The thing that is the most non-fungible,
That's
like
right. That's exactly right.
Yeah, that's a good point, because you're right. We're going to be polluting and corroding so many human experiences, especially like with android robots and fake friendships, and that was the post 2000 period was really interesting and you're hitting on it, because the bubble burst and it was a terrible 2-year drawdown, maybe almost 3 years. But two really interesting things happened. One was value stocks actually ascended. So there was an ascent of a new class of stocks that really did well. But then in the middle of the center of where the bubble burst, okay, where huge deflation took place, because all of a sudden fiber prices deflated and service and provisioning prices collapsed, that a new class of tech stocks emerged as winners. And it was the eBays and the Expedias, because all of a sudden their business models worked because fiber became cheap. And so you had high gross margin businesses, and actually the winners of the post-internet bubble collapse were internet companies, basically.
Tom Lee challenges traditional economic metrics, arguing that they are often manipulated to support a specific narrative, such as labor statistics and inflation figures. He points out that the ongoing adoption of Bitcoin by governments, institutions, and the media highlights its growing recognition as a valuable asset. However, Lee emphasizes that this is just the beginning, comparing the early stages of Bitcoin's journey to the current widespread interest and investment, with a particular focus on Bitcoin ETF. He sees this as a major shift in the financial landscape, suggesting that conventional metrics are selectively measured to create desired outcomes rather than reflecting the true state of the economy. In this context, Bitcoin stands out as an alternative, separate from the manipulations of traditional economic systems. Lee also notes that established companies like Apple, Amazon, and Google are positioned to quickly accumulate significant amounts of Bitcoin through spot ETFs, bypassing the complex process of directly acquiring the asset. This demonstrates the transformative potential of cryptocurrencies within traditional financial institutions. Michael Saylor emphasizes the need to embrace digital currencies as the economic landscape rapidly evolves, urging investors to harness Bitcoin's potential for a more secure financial future. What are your thoughts on Tom Lee's latest interview, and how do you think Bitcoin's trajectory in the coming months will shape the crypto market and the investment world? For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.